Good morning, everybody. How's everyone doing today? Hello, Crazy Ivan. If you wouldn't mind, let me know that you can hear me okay and that the sound is coming through without problems. That would be great. Hi, Miles. Good morning to you, Al. Thanks. All right, glad you could hear me. Everyone's just starting to come in. Seems like it's been forever since I've been here, even though it's only been since last week. Hope everyone had a nice Memorial Day. Can't believe it's Thursday. All right, so we're off to the races. Not sure. Was anyone in this crude oil trade? It seems like it may have happened too quickly. I was busy trying to get my computer started this morning. It, for some reason, was having issues. You could see that it came down and hit that first target objective really quickly. But just looking at the timestamp, that might have went too fast. If anyone was able to grab that, let me know. I'm thinking it was probably too fast, and we're still waiting to take our first trade this morning in crude oil with this trade plan anyway. If you're able to grab it, then great. You're one and done. It was a 14-cent, $140 move there per contract. But again, it just seems like it went too fast. Just curious. Hey, Youngtown. All right. I'm glad you enjoyed the book, and you're very welcome. It's nice to see you this morning. Feel free to interact with me. I'm just going to go through what's happened so far with the earlier morning trade plans. This is the Spotlight Master Suite we're looking at here on all these charts. We could look at some counterpunch and some other things in a bit. An early plan that starts at 9 a.m. is this unleaded gas plan with Spotlight. It's a 20-tick momentum bar, 20 range bar on NinjaTrader. And you can see that the first trade came right here at 9:06. Definitely plenty of time to get in on it, and it's already hit its target objective. Usually target 2, but target 1 actually could be a target objective as well, especially on a nice sized trade like this. 54 ticks, 84 ticks, and then the trailer. This trade's done, one and done. So we like to hit our goals quickly if we can. And if you're trading unleaded gas, you'd be very happy with this morning's outcome. One trade, and this plan is done. So nothing really to do there now. Unless you want to trade that after, on the heels of the crude oil report, unleaded gas is actually a nice market to trade. Pound Aussie has been in trouble today. It just has been not a very nice chart. Pretty low range since we started, up, down, up, down, up, down, and a couple short trades just unable to get it done. There's some areas to adjust around that maybe might have avoided some of those, but yeah, so far so not so good. This trade here, short at 77. Have that. You want to adjust the stopper on the key level. It may go through it, but in this case, that stop would be at 84.01. 84.01, and then you got to add spread on top of that. So maybe that'll hold and come down, but this seems pretty determined to go higher. So, yeah, Pound Aussie, not such a great session this morning. So the markets have already opened, obviously. The Dow Mini, we're still waiting on our first trade, and there have been some nice setups in here. Unfortunately, they're filtered out with what we call the squeeze filter, and the filter sometimes works against us because it'll filter out some winners sometimes. The reason why this trade was filtered out is because, let's see if we reduce this down, we can kind of see it better. When the 50 moving average is coming up from below to meet the descending 200 moving average, this is a real test area in here, and quite often it'll keep going and the odds are better to follow that yellow line up. In this case, it curled over and didn't have enough to get even to the 200 moving average, but the code of the strategy doesn't know that, and so it actually filtered out. That's why they're showing in gray. Gray means flat with spotlight. Spotlight got its name because it shines a spotlight on the trades with the highest percentage of winning. And it'll filter out some trades that the odds are not quite as good. That doesn't mean that the trades that it filters out won't win. And with some advanced learning, you could maybe use these filtered out trades. That's why we show them in gray, because you might opt to take them anyway. Like the second one here could have easily have adjusted that entry. Oops, hard time grabbing that arrow. Jesus. Could have adjusted that entry a little bit below the moving average here, and then, taking that trade obviously would have been good. But that's outside the trade plan. So the trade plan's still waiting for its first trade of the day, I guess, is the moral of this story. And missed a couple winners there, but that's just how it goes. There's no way to know until it's already happened. We're geniuses with hindsight. But filtered trades, it does a good job of filtering out trades you don't want to be in also. So you got to take with the good with the bad. If anyone has any questions so far about what you're looking at, just let me know. We got a Russell mini chart on the upper left. We're just kind of watching it. It's not really something that I'm trading or advocating these days. Still trying to get a feel for. Ever since COVID hit a year ago and the volatility got crazy, and then the Russell being worth half of what it used to be, I just haven't been able to get the feel for it. Haven't been able to find the right chart to use. So just kind of watching it because there's interest in it. But I used to love trading the Russell, but I haven't really traded it in quite some time. And then the one up here in the middle is this is also not one of my favorite charts. It's the NQ. It's not even one of my favorite markets to trade because it can get really wild and skitsy. And we're looking at one of the advanced setups in the Spotlight Master Suite Diamond level. And it could be really, really good at times, but it could also be like downright miserable, like what you're seeing here. This is a nightmare chart. So it's not something I'm actually advocating either, just trying to get a feel for this one too. So these are just two E-minis that we're watching, and I'll probably replace these charts with something else at some point. Randy, I don't usually trade gold. I'm happy to open up a gold chart. I might have one handy, actually. Let's see. There's one. It's probably not the right front month. Let's figure out. Are we in July? What's the front month on gold? Let's see. Gold is one of those markets that I've had some success with over the years. It's just, I find that it works really good earlier than I care to get up, being on the West Coast. With Counterpunch Trader and Spotlight, I've looked at a 610 tick chart. This is a 6-tick momentum bar. And I mean, I'm not sure what the start time should be on gold, but you can see this last trade just fired off. Yeah, there's a lot of action. You can see that 6-tick momentum bar. I mean, 8:30 maybe is a start time I might be interested in, and you could see that would have been a nice trade, almost hitting a perfect target 3. You got to pick your spots, right? Whatever you choose, let's say you want to trade gold, the way I would do it is there's 2 approaches. One is to come up with a good start time that you can hit your goals quickly, be done, and turn it off, and just repeat it over and over. Because with something like that, you can easily test it. You can test it, you can get measurable results, and then you could practice it. So let's say you're testing an 8:30 start time like we were just looking at, which seems reasonable to me. Whoops. I usually look at 8:30 as a typical start time, maybe 9, but with gold you could even go earlier. And then you could fast test it. Like you can go back and look at a bunch of sessions that started at 8:30 and count how many you could have won, how many sessions you could have quit with a positive result with like the first few trades, say. Hopefully you're going to hit your goals with the first trade most of the time. So finding that start time is really important. And once you do that, then you got something that you could actually build a trade plan that's really tight and concise. You also have to figure out the best chart. I don't know if the 6-tick is the best chart. It's proven to be good in the past, but since I've looked at it last, I don't know. This is a lot of bars. How many bars there are just this last hour and 20 minutes? I mean, I can't even get to the end of the chart. There it is. So from here to here, that's a lot of bars. So the 6-tick might be too fast, or maybe that's just due to current market conditions. And that's a 6-tick range bar, right? It's not a tick chart. So a 610 tick chart might be interesting. That's always worked well with Spotlight and with Counterpunch. And then you can go back and you can see that there's a lot of action earlier. So it's really about, picking a good start time and then proving that you can quit with a positive result most of the time, like a vast majority of the time, with minimal and efficient trading. So hopefully within the first 1 to 3 trades, you're able to hit your goals and quit and get away from the market, or at least this chart. Because there's a lot of randomness too, and you're going to hit some losses, and you don't want to give back your winners. You want to keep your winners and then just try to repeat that day in and day out. And that, like this, you could prove a plan. So whether you're using gold or anything else, that's a really good approach because it's something you could prove. You have to prove it. If you can't prove it, you can't make a plan out of it. And if you can't make a plan out of it, then you're just shooting from the hip and you're going to be, beholden to the random distribution of wins and losses. So you want to take that random distribution of wins and losses and control it with a trade plan that puts the odds on your side, right? That you can quit most of the time, keep the money, and then get away from your charts and just repeat it each day. So that's one approach. Now, the other approach is that you learn to specialize in certain types of price patterns, and when they occur, you just learn them so well that you know that the odds are in your favor, that the trades that follow are going to be really good. Like, so for example, one of the things I like to look for is the inability, like when you're breaking support and you can't follow through, the price does not follow through. It starts to find stronger support, can't follow through. Usually the trades in the opposite direction will be very good. In fact, when you get a breakout through resistance or support without follow through, you often get a strong move in the opposite direction. That's not always the case, but that's one of the good things about Spotlight and Counterpunch is it'll give you setups in the opposite direction that have a really good chance of succeeding. So there's lots of examples of that, and you could learn how to look for these examples and get really good at it. Just looking at this chart, for example, it tried to get higher here and failed. Like, you're not taking trades until you see this condition. So this isn't something that you can really test. Well, maybe you could test this idea and make a trade plan out of it if you have a window of time that you're looking for these things. Ultimately you want to test a plan so that you can prove it. That's, I think, the best way to be consistently successful. But if you get really good at the setup, obviously you're going to have test results based on what happens in your trading account. But like, you can put a horizontal line to visualize how this broke through some resistance here and failed to follow through. And it was the reversing trade, actually a strong move in the opposite direction. Higher time frame chart would have been really smooth all the way down. This is a 6-tick chart, pretty fast for this market right now. But I mean, that first trade was successful, right? And then the next short trade too, you could see that here again. Well, this is like a reaction. You have a strong action move down, a reaction move up, and another action move down. And this is the trade that was actually the strong move right there. But then right here, it fails to makes a new low, but fails to follow through, right? So now you're looking for long trades, and it's really overbought. You can see the histogram is way overbought with the blue bars poking up. So you have some corroboration, then you have your exhaustion dots. Actually, this trade here, the way it's set up, is off of these 3 dots that came before. 1, 2, 3, 4 bars over to the right, and that gave you that small little setup. It's just the way the cookie crumbled. There's another setup here. If you turn to add-on trades on, you'd see it, or you can just draw it. And that's going to be a bigger trade. What, does it go up? I don't know. Well, it did get to the first target anyway. But you could see that, again, the failure to follow through below support led to a nice move up. So those are trades you can focus on. So that's the 2 approaches, I would say, regardless of what chart you're using, whether it's gold, whether it's anything else. I don't like to get married to any particular symbol, although I think the energies are really hot right now, and they just tend to produce really well most of the time, which is why I've been focusing on the Catapult Energy Futures, a new strategy I'm coming out with, a new boot camp training this month. Actually, I'm going to be announcing it pretty soon. Because we don't really look at the Catapult Trader in here unless someone asks about it. The earlier versions of it that works on ES and the YM use a slower chart. It's not really conducive for Traderoom. A 5-minute chart takes too long. But it also works on range bars and tick charts. And I've been using different types of charts with the energy futures like crude oil, heating oil, unleaded gas. It works really well. So we'll be talking a lot about that in the coming days. But again, the 2 ways to build a good trade plan is to have a start time, certain setups that you can hit your goals quickly, you can get measurable results, and prove it. Proving it's the essential ingredient no matter what you do. And then the other way is, like I just showed you, just try to isolate certain setups that you become comfortable with, certain price patterns that you could identify that will lead to a high probability result after. Like, you could predict what's going to come next with a high degree of accuracy. Stacking the odds in your favor, in other words. So that's kind of how I recommend using my strategies. One is a little more advanced, obviously, than the other. I think it's easier to look for start times and prove that to yourself when you're starting out. But as you begin to look at charts more and more and more, you start to recognize certain patterns, and then you can get really good and specialize on certain circumstances, like what I just explained. A failure to break out in one direction leading to a strong move in the opposite direction is always a really good pattern to get good at trading, I think. Couple questions here. What are the benefits trading crude oil versus BTC? I guess the problem I have with BTC, Bitcoin, is that can you short it? Can you just trade in and out, up and down? I'm not sure. I don't know how to chart. Like, I have my strategies that work, and I can't really chart Bitcoin in a way that I could trade it. I mean, I know there's a Bitcoin futures. It's very expensive and there's not a lot of volume on it. So, I mean, I like something I can move in and out of easily and quickly and cheaply. So, I mean, you can make a lot of money with Bitcoin. Don't get me wrong. You could also lose a lot of money. That's why you want to have a strategy that will print you high percentage trades like the style that we use in here. But, I'm waiting for Bitcoin just to be able to, so you could trade it like any other market where you click a button, you could sell short. Can you sell short Bitcoin? No one's really showed me how, unless you're using like an MT4 broker from overseas where you could do Bitcoin versus the dollar, Bitcoin versus the euro, and you could sell cross, like synthesized Forex crosses. But then you got to use MT4. It's kind of a crappy charting platform. I don't know. It's very hard to test and build a trade plan with something unless you have a good charting platform. Like Thinkorswim and MT4, kind of crappy charting platforms. It's hard to build a trade plan you could rely on. So for me, I don't care what the symbol is. I want to be able to build a trade plan I can prove and be successful with. The symbol doesn't matter, in my opinion. Does any of the info on the chart ever overwhelm you, like the indicators and whatnot? Well, if you don't know what you're looking at, but when you learn a strategy like this, you take it step by step. So like, let's look at crude oil, for example. Like I'm busy showing you stuff. We're missing the first trade. The first trade was here, but it went too fast. Looks like this one you probably had time for, but I mean, let's make it bigger so you can see it. And in fact, like I have these lines on the chart. This is just a 20 simple moving average, a 50 EMA, exponential moving average, and a 200 moving average. And I just use those to mark near-term support and resistance levels. That's about it. Like I'll make little adjustments around them. So the lines seem like they could overwhelm you because it's just a lot to look at. But when you're first learning the strategy, you don't need those lines. You can turn them off. You put them on later as you learn how to make chart level adjustments and work around certain things. Let's ask the price to push through certain levels. In other words, that's kind of how I use those lines. Extra price action confirmation. And then the colors are weird because this is Spotlight. Spotlight Power Trader is how this system began. It later became the Spotlight Master Suite as I kind of built it up and gave it more capabilities. The whole idea is it shines a spotlight on high percentage setups. And so what it does is that when you're flat and not in a trade, the bars are gray. So that just means you're flat. You're not in a trade. And you have to just get used to what the colors are. The dark gray is up. The light gray closes down. And you get used to it. At some point, it's just like looking at a red and green bar. You just realize, okay, this is up. This is down. Okay, when a trade gets into a short, all the bars turn red, and the bright color goes in the direction of the trade. So bright red means down, and dark red means it closed up, and you just get used to it. Okay, so the little plus sign here that you see on the right edge of the chart, that's your entry. And when you click on the bar, you can see the whole trade here in the data window. It's all there for you. So once you know what you're looking at, it's the opposite of confusing. It's like, it's better. Everything's right there for you. You got your short entry. You got your stop. Your SX is your stop. It's right up here at this dot. So you have your entry, your stop, and you got your target objectives down below. That little itty bitty dot right there, I don't know if you could see it, but that tells you that when the price gets to that level, the stop will move to lock in one tick and put you in a risk-free position. So that little dot marks the first objective where you get to a risk-free position. And you can see that in the prior trade, right? The prior trade kicks in, it comes down, hits that little dot, and look at the stop. It moved from here down to here. You see? Then the first target level, usually we're going to go to target 2 as our main objective, but on this chart, the 8-tick momentum bar, this trade plan lets you take profit at target 1 as its main objective if the target is greater, 10 ticks or greater. That's just the rule of the plan. So it wins a lot, right? So you can see it came down here and it hit target one. It starts at 9 a.m. This trade plan, by the way, remember I was talking about start times. This one always starts at 9 a.m. The problem is right at 9 a.m. it blasted through the entry here, and I wasn't looking at it because my computer was I had to restart TradeStation right when I was just having problems getting started this morning. So I didn't see if this went too fast. But looking at the timestamp, it only gave you 11 seconds. And it seems to me like it probably went too fast. So I'm not going to count it, right? But if it didn't go too fast, like in this next one here, you're getting into that trade. But this one came down and it hit target one for 14 cents, would have been $140, and you'd be finished. So this is what I mean with a start time and a set of goals, because now you could take this plan, you could look at like 100 sessions in the past and just count winning sessions, losing sessions, break-even sessions, and see if you can quit with a positive result most of the time and grow your account, and then start leveraging up with power of compounding and keep it really simple. And let's say that you were able to grab that trade. You're hitting your target in like 30 seconds and your workday is finished. Like if you're trading one position, you're able to get into that trade and get out in 30 seconds. I mean, you're done, right? So that's that's what I'm talking about. Now you can test. And what's beautiful about a strategy like this, it's so visual. So it's really easy to test it, right? Yeah, isn't that something? So I've been teaching this method for years and years, but with Spotlight, when you know what to look at, it's like, wow, it's not confusing at all. It's actually less confusing than if you didn't have this. This is like makes everything simple. So let's say now this was too fast, you couldn't trade it. We're not going to count that. If you can't trade it, it's not going to count. So you have to look at the timestamp and figure, okay, that probably went too fast. Let's make it take the first trade as the next setup, whatever that is. So I'm not really teaching you what causes a setup because, we can get into that. But let's just say, some of the basics, the pink bars poking up, meaning that the market's overbought. You got your exhaustion dots here indicating that the buyers are tired. And then you have a bar closing below the balance line. All those conditions lead to a setup, okay? You have rules, and then the measurement is such that it's dynamic and the targets are actually quite accurate. I mean, look how accurate target one was before it went the other way. So now you've got your entry, and it's at 92, and you got your target objective. If you're trading a single contract, you're probably just going to go to target one. It's good for 16 cents. It's $160 a contract. Other charts, usually we're trying to get to target two. You could still go to target two if you have more than one contract with this plan. That's $250, et cetera, et cetera. All right. So anyway, so you place your order, you place a bracket order where when you get triggered into the entry, it activates a target or targets and a stop that are connected with order cancels orders, with OCOs, right? So it's all set up as a template. You place the order, triggers in, and it slams right on down. Right here, you see it hits that little money management area, we call it. The stop moved down, took the risk off the trade. But if you have one position only, you're getting out at target one and you're done. If you have multiple positions, you might be taking some of it off at target one. And you only trade multiple positions if you have a large enough account size. Because what's another thing you want to do is you want to look at the risk of this trade. So for example, if you're getting in at 92 and the stop's at 16, right down here, you can see the risk is 24 ticks, $240. The target one is never going to give you a one-to-one risk-reward ratio. And the reason why is because you've got some breakout that you have to move to get to the entry, and you have an adjustment on the stop up here, but you have a high percentage, so you win often. So that's not really your one-to-one or better risk-reward ratio. It just wins a lot. You're going to get the better risk-reward ratios when you start going to the bigger targets. But the point is that with 24 ticks at risk, that's $240 a contract, you have to do the math and make sure you're not risking more than 2% of your trading account. Because that's the key. If you over-risk, then the losses wipe you out. Even if a 90% winning strategy will wipe you out because the 10% losses you can still lose 3 or 4 or 5 in a row, right? So if you're risking more than 2% of your account, then you don't have the capital to keep trading, and then you miss all the winners that come. So it's really important that you don't over risk. That's super important, actually. You have to risk the right amount. Yeah, so Youngtown, that's normal. Most inexperienced traders will do that. They'll get learned. The market will learn them. Will learn them some hard lessons, right? School of hard knocks. We all have been there. It's an expensive lesson to learn, but hopefully you learn it, because some people never learn it and they just keep making the same mistakes over and over again. So once you hit that first area and the stop moves down, now it starts to trail what we call the balance line. Now, this balance line is marking the balance of power between buyers and sellers, and it's really important to see how it operates and what it tells us with price action. So, like, for example, when you have exhausted sellers indicated by these 3 dots, and notice that they get exhausted at higher levels, it's failing to make new lows, now it's making higher lows. And then you've got bars closing up above the balance line. The buyers are in charge. And that you get a lot of information just from the exhaustion dots in the balance line. Counterpunch Trader uses the relationship of these dots to the prior dots. Like this would have been a setup to go long in Counterpunch Trader. And probably would have, I don't know if it would have got to target 1, it might have failed. But the point is that Spotlight, yeah, it would have failed. Spotlight doesn't care about that. It uses other things. But Counterpunch uses the exhaustion dots, the balance line, and price action, and the relationship of one set of dots to the other for most of its setups. Okay, and there's different criteria, and I teach that with the Counterpunch strategy. Spotlight uses this unique OSOB, oversold overbought indicator, and it uses the proximity of these dots to different moving averages, typically a 50 moving average, and you could turn it on with other moving averages too. And so you're able to line up your exhaustion on key moving averages that show you support and resistance. So you got exhaustion at support and resistance, which gives you some nice setups. So Spotlight works differently. But anyway, it's using the exhaustion dots, the balance line, and price action, and then a real accurate method of measuring targets. So in this case here, it did get to target 2 perfectly, but it had stopped out with its trailer first. So you can see it was a super accurate target, like super accurate. Couldn't even get closer than hitting it perfectly. But our money management strategy was a little too tight in this case. It spiked out before it got to but still it's one and done, right? I mean, it hit its goals. And you would put that down as a winning session. You don't have to keep trading. Once you hit your goals, you're done. So that's the whole idea. Now, when the crude oil report comes out in about an hour, some traders will use this chart. Some traders will use a faster chart, a 5-tick momentum bar. I'm going to use a counterpunch chart, which is this one. This is counterpunch. This is a 377 tick chart. It works similar. You have your exhaustion dots, you have your entries. Let's see how this would have done starting at 850. So 850 is its start time, and here's 850. So the first trade of the morning is a short trade, and you can see it's a pretty small trade. This goes to target 2, but look at how it came right down and it hit it perfectly, and then trailed on lower all the way down to here. And it gives you setups within setups. But we're not interested in subsequent setups unless that's the first trade. It wasn't. This one was. So Counterpunch Trader was also one and done today. I mean, it hit its goals with its first trade. There's a plan that starts at 850. I mean, you could start at 9, I guess, too. That's a different approach. And if you started at 9, then you would have probably ended up in this trade here, and this trade ends up not going very far. It stops and reverses to this trade, and that trade wins. And the stop and reverse, you're going to lose just this tiny amount right in there. But then that trade comes up and hits its goals and wins really nicely. So if you're starting at 9 a.m., then you're done with 2 trades. If you're starting at 8:50, then you're done with 1 trade. But it wins. And again, maybe you're being confused because you see all these dots and stuff, but if you know what you're looking at, and you know what the dots mean, it's pretty easy. It's the same thing. You click on the chart, you click on the setup bar, the whole trade's listed. You know what your risk is, you know what your targets are, you know what the whole trade is, etc. So that's Counterpunch, and I'll be using this chart to trade the crude oil report, but we'll look at all three. Yeah, so now that I showed you what I showed you, you can look at gold and see that, you have a chance to pick up winning trades, but you'd have to find the right chart. This chart seems too fast. Gold's like really lively. Maybe it's just today. I don't know. It's not a market I really watch. But you could see it got into this long trade right now. The yellow trade is based on a setup that where your exhaustion is close to your 50 moving average. And you can see how that's often a really good trade. It just hit its money management level here. When this bar closes, you're going to see the stop move from here up to here. I just taught you that. I mean, there's nothing new to learn. It works the same on everything. So once that bar closes, which will be any second, you'll see the stop move, and there it is. It just moved. See? So you have a lot of structure on the chart, and that helps you with trading, because when you have structure like this, you know exactly what to do and when to do it, and then what to do from start to finish. Getting into a trade's easy. How about getting out of a trade? That's what gives traders most problems. That problem is solved with these strategies, because you know exactly where your targets are, you know where your stops are, and you know when the trade is finished. There, this trade just finished. This is obviously a really fast chart. Too fast, probably. I mean, you could probably trade it, but if you don't have tight rules, you can lose just as fast as you can win, because nothing, even if this wins 73, 74% of the time, what about the 25+% it doesn't win, right? Those trades happen too. So that's where you want to really have a trade plan so that you can hit your goals and finish and be done. So I just gave you a really fast crash course, I guess. Got a few new people in here that don't really understand or know my style. So hopefully that helps. Yeah, so let's review YM. So YM, this is a chart I typically like to trade. And it did, again, Al, I don't know if you were here when I was showing you how these two trades were the trades you wanted to be in, even though they're filtered out. Now, there's a thing about the squeeze zone. The squeeze zone is what I call when the 50 is pushing up to the 200 and getting to this apex, right, where it looks like it's going to get to that 200 and keep going. And the code, though, doesn't take that into account. So before the code was written, and I used to trade Spotlight when I just had exhaustion dots and a balance line and bars, and then I would just do everything manually, I don't think I would have considered this the squeeze zone, because you got a lot of space in here. The squeeze zone, and we can look at some examples, is when that 50 is closer and closer and that space is squeezing, because it's looking like it's going to cross over the 200, and you want to be long, not short in that case. But the way the code is written is that the 50 is moving up, pushing up to the 50, and the entry is inside to go short against the direction of the 50, and it grays it out. So like it grayed it out here. And that would have saved a loser. Well, it never hit the entry, but if it did, you could see how that would have prevented a losing trade. This one prevents a winning trade. Then you have a second one here, and this one here, like I said earlier, we show them in gray because then you could still see the trades. You could easily adjust a couple ticks below the 50 or even below that swing level. And if it pushes through, you can get short there. You can make an adjustment. And then you would have hit your goals and you'd be finished. That's a little bit more of an advanced approach. The basic trade plan says gray means flat. So if you're just following the basic plan, you're still waiting. And then you get this long trade, which unfortunately is going to lose. But I use that 20 SMA to adjust around. And the 20 SMA is at 34. I don't know if you could see it very well. It's 34,373. So, I mean, I would adjust that up to 376 because I don't want to get long at 374, especially on a what could be a reaction to a pretty strong move down, because the 75 level is a quarter century number. Your 0, 25, 50, and 75s are often support and resistance levels on the chart. So why not make an adjustment to 76? And it does stab up to 73. The EMA is at 73, so even if you make a one tick adjustment to 74, the point is that 20 SMA often marks where reactions end and then new action moves begin. You could see it. That's why I use the 20 SMA, because then you could adjust around it and avoid getting in to reactions. You don't want to get in on a reaction. A reaction is going to lead to another action in the opposite direction. You want to be in on the action moves, not the reaction moves, right? So the 20 SMA is a really great tool for that. So you can use that. Like, here's an action move down and here's a reaction. Look where the reaction finishes, at the 50 and the 20, right? There's no setup there, but just so you could visualize, action, reaction is often followed with a subsequent action that tends to mirror the first action. It's not perfect because this happens on all charts and time frames, and sometimes you have to imagine this on a slower chart that's not as noisy. But you can see there's your subsequent action move down, and then you have smaller action reactions inside of it, like ripples inside of bigger waves type of idea. But you don't want to get trapped into a reaction, right? Because those trades have a low chance of success. They typically lose. So with this tool, the 20 SMA, and knowing what we know about the 75 level, you have the ability to avoid that long trade. Okay? So again, this is advanced understanding of price action, but this is how I like to visualize things. The strategy is dots on the chart, but when you start applying it to, listening to what the price action is telling you, you could improve your trading. So that trade really should be avoided, not taken, right? Unless it comes down and fails to make a new low and then goes up again and pushes through your adjustment, then you get long. Didn't do that. So then here you have another one, and in this case, you're still going to make an adjustment. And again, I'm sorry that's such a dark number, but that's at 34,356. I mean, push it up to 357. It's a one tick adjustment. You want to be sure you're not getting into another reaction. Now, you could get an action move in the opposite direction, but anyway, that's going to push through. So you're going to get into that trade. I don't see how you could avoid it. And it's going to hit the 50, and then it's going to come down and stop and reverse. So that's just the way it goes. So the way I see it is you should avoid that first trade. You're going to get into the second trade. The stop and reverse, you're going to try to stay in the long trade. So you're going to adjust that stop and reverse down 2 ticks to 25, and then 1 tick lower to 24, around the 25, right? So a 3 tick adjustment, and that's not going to save you. You're going to get short anyway, and then it's going to stop and reverse it again. So the way I see this is that there's 2 partial losses. You're going to stop and reverse again because remember, you want to try to stay short, but if you have to get long after the adjustment, you get long, and that cuts the loss down. So if you think about it, the blue trade would have lost anyway because it came down and hit the stop, and you're able to shave off a few ticks, right? So you don't lose as much. Then you get short, that stops way up here. Well, that would have stopped out anyway, but instead we're able to flip over and cut that loss more than 50%. So you have a couple partial losses. The third trade delivers the goods. Depending on how many positions you're trading, you may or may not be finished. Like if you're trading multiple targets, you're probably hitting your goals and you're done. If you're only trading 1 or 2 positions, the targets 1 and 2, for example, or target 2 and trail, odds are, you have to do the math, but you're probably still needing another trade. Here's a squeeze zone. didn't trigger in, but if it did, it would have saved a losing trade, that gray trade there, right? So no setups since then. Now there's another setup we can turn on. It's a more advanced setup. It's part of the diamond level, and that's where you're in the dark blue and you want to turn that setup on. It's really good in a trending market. It works like the yellow trade, the proximity of the dots to the 50 moving average, but in this case, it's the proximity of the dots to the 20 SMA. And you could either turn that trade on if you have the diamond level calculator, or you can learn how to manually draw the trade based on how the strategy works. And that would have been your next winner if you're using that setup. I could turn it on too and show you. Open up the calculator and come down to dots to SMA setup. It's the D06. Set that to true. And then you'll get the setup. It's in red, should be in dark blue, but you can see the setup. It's right there. And then there's another one, actually. So there's two of those. Look how accurate the target is. That's still going, by the way, regardless of which one. So again, there's just different ways to use the strategy, and you know, that's where testing comes in. So I should change the color on this. Might be harder for you guys to see, but I like to keep the colors matching the lines that the trade is working off of. Yeah, Al. So obviously there's techniques to learn, right? So look at what happens when you put on the blue trade, the 20 SMA trade. It changed everything. Instead of a long trade, let's see. If you remember, there was a long trade here. It ends up getting avoided. Yeah, that's interesting. I wonder why. Huh. That's weird. The way this worked out is you end up with the first trade of the day being here and hitting a perfect target too. So by having the blue trade on, you're able to catch that last part of the action move down. And remember how I said markets trade action, reaction, subsequent action that tends to mirror the first action? I took this line that measured all the way down, duplicated it, moved it to the beginning of the next action move, and look at how accurate that was. So when you see an action reaction like this, action reaction, we have a good idea that the reaction is going to end here. That's a real bearish bar, by the way, with the spike up and the small body at closing low. I look for bars like that too. That's another thing you can learn. But that is a good indicator that this is the end of a reaction move, and there's a good chance you're going to get a subsequent action move, which could mirror the first action move. And is that not exactly what happens? Meanwhile, you got your exhaustion on the blue 20 SMA, and that lets you get in on that last part of the subsequent action move with a real accurate target too. Look at that. Right? 32 ticks. I mean, that's $160. Just that small little move right there to target too. And you'd be one and done. So you wouldn't have to worry about what happens next. Again, the random distribution of wins and losses, right? So it just depends on your trade plan. It depends on what setups you use. It depends on what you test, what you prove to yourself, and then you get really good at it. Regardless of what setups you choose to use, it makes sense to use this 20 SMA, the dark blue trade here, when the market's trending. It's a good setup to pick up subsequent action moves. It even will get you into the first action move sometimes. What you don't want to do is take a dark blue trade when a trend is getting tired and you see that action moves are losing their energy. That's when the dark blue trade has low odds. So it's also really important to understand what makes a setup, why the setup prints, and what the strengths and weaknesses are of that setup. No setup is perfect because price action has different things about it. You know, there's different cycles that occur. There are patterns that repeat over and over and over and over, right? So learning the strengths and weaknesses of each setup is how you elevate your trading. And that's how you become better and better at what you do. So like these spotlight setups, there's certain things they're really good at, and then there are some things they're not so good at. Like we know that the reversal trade will often lose in a trending market. But that makes sense just from a definition point of view, doesn't it? If a market's trending, obviously a reversal trade, that's a counter trend trade, it's going to lose just by definition. But one thing you learn is that by the time you get that fourth setup in the opposite direction, the odds are it'll start winning more. So another thing you could specialize on is wait for that fourth reversal trade. Now, the odd thing that I don't understand is why we get a setup here and we didn't get a setup when I turned that blue trade on. And I don't know why. There's something going on with the code that prevented it. I forget what it is. There's got to be a reason. I just don't remember. But anyway, you got one reversal, two reversals. It's the third reversal that wins. So the third reversal is obviously going to have better odds than the other two in a trending market. The fourth reversal has even better odds. But what can you see from what I've told you so far on why you'd be interested in this third reversal versus these other two reversals? I mean, first of all, you might look at this and go, well, it did break support and now it's going higher, so maybe there's no follow through. And the failure to break lower could lead to a strong move in the opposite direction, right? I just told you that earlier, and that's true. So you don't want to just ignore this trade, but you have conflicting details because you also know that we're trending down. You also know that the blue line marks where reaction moves end, and you don't want to get trapped into a reaction. So the only thing you can do is ask for a little price action confirmation, a little more price action, and make a small adjustment to get around the quarter century number and around the 20 SMA. And just by making that small adjustment, you still may end up in the trade, but in this case, it's enough to keep you out of the trade and you avoid a loser, you see? And then it does follow through. So it follows through the break of support. It just took a little bit of noise to get there, right? Now you have a new support level. And then you have another long trade. Okay, again, you don't really have it breaking support. Is this a reaction or is this an action move in the opposite direction? I mean, we get V-shaped reversals, and the spotlight's really good at getting V-shaped reversals. Again, use the same technique. Make a small adjustment. In this case, there's no avoiding it. It gets you long, and you're not going to take it unless you have a rule that says wait until the third and fourth reversal because the odds are better. I could see that. Anyway, that trade's just destined to lose. But right here, it breaks support again. I mean, the yellow trade has you going short, but it breaks support, and now you have no follow through again. It even comes down and tries to go lower and can't. Gives you a third reversal. You could adjust that around the spike. Just make it push above that little spike right there. But it's going to get you long, and that's the winner. You don't want to just avoid trades, but you can use price action to avoid some of them. I mean, by avoiding one loss, it makes a big difference, right? Then you have two partial losses. Nothing's perfect, but you could see how when the trend ends, and it fails to push through support. This is a very bullish bar, by the way, where you have the tail and then the smaller body closing up. It's a bullish bar. You have another one here at the entry. Another one here that triggers in. These are all bullish. That's a bullish bar. But anyway, there's a lot of information here. You can get really good at learning. But it's the third and fourth reversal when the energy is waning to the downside and the inability to follow through. The trade in the opposite direction tends to win big. So hopefully, the more you see this, the more you learn from it. Obviously, now you have a trending market up, so that the dark blue trade, like I put on earlier, definitely is what you want to be. You want to take those, especially when that line's angling up, pushing through the 50. The 50's pushing up, trying to get to the 200. This is what is the squeeze zone, this area in here, or even in here. You can see it's a much narrower space. That's what that filter was designed for originally. It's just the code didn't catch that nuance. But anyway, so that's Spotlight. Let me know if you have any more questions. Still, not sure if we need another trade on the Dowie Mini. You had a short here that didn't trigger in and then canceled. Now you have a trade. This filter is not based on the squeeze zone. This filter is based on the 50 moving average crossing over the 200, and you need to wait for 8 bars before a short trade. And then you'll see a magenta. A magenta bar will print, and that'll show you the 8th bar. So, yeah, sure thing, Al. I mean, I know I'm throwing a lot of information at you, but the good thing about YouTube is you can go rewatch it and listen again, and nothing's perfect. That's the thing you have to realize. You have to give yourself a chance to just kind of let experience do its thing. Like, when you call a live trade room for 18 years, you have a different point of view than someone who hasn't, had eyeballs glued on charts for so long. Just the way it is. So, any other questions, guys? I'm going to be doing the Crude Oil Report. Usually it's on Wednesdays. It would be starting in about 2.5 minutes from now. But because of the Memorial Day weekend, the Crude Oil Report fell on a Thursday. That's today, and it's at 11 a.m. So I'm going to be back at 11 a.m. to do the Crude Oil Report. In a few minutes, I'm going to close up this session and then start a new one like I typically do, and you guys can log back in as we get closer to 11. So I'm going to end up closing this session a little while and then setting up for the Crude Oil Report. So this is a good time to ask any questions if you have any remaining questions. Yeah. And I would appreciate it if you guys would click the like button. That always helps our YouTube channel. So if you can click the like button for me, that'd be great. If you haven't subscribed yet, I would suggest you do, because then you get notified when we go live. I'm going to be doing a Trade Hacking Club session live here as well. I haven't announced when. It's going to come up pretty soon. I have to just look at my schedule. I'm just super busy trying to get the Catapult Energy Futures launch, get that product ready to go. Getting really close to releasing it. I'm really excited about it. Got some really cool stuff with that. Energies, as you know, I mean, works great as a day trade market. You can do so much with them, especially crude oil, unleaded gas, and heating oil. You can see Spotlight's been doing really well on unleaded gas today. Spotlight was one and done, triggered in here, was able to hit its targets, first trade. Here's an example of that blue trade not working. Kind of an odd looking move higher here. Not much of a reaction, but you can see that the blue line did mark a reaction, but you just didn't get a subsequent action that had anything close to the prior action. So the blue trade would have lost here, but luckily with trade planning, we hit our goals with the first trade, and we don't have to worry about any more trades. But it's good to see that that blue trade, while good at times, doesn't always work. And here's that magenta bar I told you that counts the 8 bars after the crossover of the 50 crossing over the 200. So it's going to prevent shorts until you get past that magenta bar. Here's a good case of a breakthrough of resistance and the failure to follow through, leading to a good move in the opposite direction. So these examples exist all over the place. It's just a matter of learning to look for them and spot them. The unleaded gas, this works really well with the new catapult. So we'll look at some examples of that pretty quick. So I don't see any more questions. I'm going to go ahead and close this session. Thanks for joining me, everybody. Remember, I'll be back in about 28 minutes or so to do the crude oil inventory report, and I will see you all then.